Good day, everyone. Today is February the 7th, 2024. I was just sitting here looking at the S&P 500 index. We have been flirting with 5,000. We may have hit it by now, but flirting with 5,000. Okay, let me just talk about that for a second. I put a couple of things in the Twitter stream, and I want to clarify my statements there in more than 140 characters. I had mentioned in the stream that we basically put out a podcast back here in July of last year that the market can go much higher, right? And then I put another thing in the stream of, listen, and I said this I think last month, the market can not only go higher, then it'll go higher, then it can go parabolic, and then it can go flat out insane. And then there was like this picture of the Joker, right? I don't want that to be taken the wrong way. As you've seen by now, I'm remaking the How to Begin Investing and Trading series. And I thought one of the new things I want to put in and flesh out a little bit more is the idea of FURUs, right? Fake gurus, guys that are on there. They learn some technical indicator or something. They put together a course and want to sell you trading. And yeah, FURUs. We all know the type, right? But what's the basic modus operandi that they've always used? And you can find it from the stuff when I began trading in the 1990s until now, right? So I thought I'm going to make a whole entry on that, which got me thinking to today, what I just put in the stream. I don't want that being taken the wrong way. You know, the model being, hey, look at this. I said it and it worked out. You know, I are so smart, right? I are so smart. SMRT, like Homer Simpson. Let's qualify those statements that I just put in the stream because I don't want to be associated with those FURU types. Back in July, yes, we had a podcast that the market can go higher. Yes, I said a month ago it can go higher and then it can go parabolic and then it can go insane. But what's the intent of those posts? Well, the intent is I see a lot of new guys, I see a lot of aspiring traders going, the market's high, so it can't go any higher. And they stick themselves in one camp, right? We are multi-strat, right? Or multiple strategies running concurrently. There's a whole reason and rationale behind that. We're not the only ones. It's a very well-known industry-used term, right? So that being said, I'm very much against this idea of just planting your flag in a stance and saying that can't happen. As a matter of fact, if you're placing trades saying, and I was just talking with a dear friend about this, if you're placing trades, because we think that a lot of new traders, even guys that may be trading for a few years, don't understand this. If you're planting your flag in and not thinking about the other side of the trade, your counterparties and what they're doing and how they're thinking, and you're planting your flag in a stance and saying, and that's why I made those posts, the market cannot go any higher. If that's how you're placing your trades, then the market has to go higher. And I'm not saying this out of some idea of fate and you're ill-fated. What do people do when they say, I'm going to place a trade because the market cannot go any higher? I'm just speaking of auction mechanics. They establish their short position. What's the next step? Place a stop loss order of some point, or maybe it's an area where they decide they are finally going to puke, which I hope to God ones are doing that when they place short-term trades. But I'll definitely puke by here. Well, by placing that order, hey, you know what? The market can't go any higher. What is this? Right here in the 4780 region in this whole structure, the market cannot go any higher, right? That's what they say. So they get involved in a short and place their stop here. The stop is guaranteeing that the market can go higher. You're placing order entries there that if filled are going to do what? They're going to pop the market higher. So the whole point of those posts was not, look at us, we're FURU types, didn't we predict the market so well? No, because that podcast 7 months ago said, there's a bear case, there's a bull case. You better understand both sides of the coin, right? And it's the same thing with playing poker. It's the same thing in jiu-jitsu. It's the same thing everywhere. You better understand both sides of the coin and what's going on in the fight. So those posts were more aimed at people saying, and I kept on hearing them say this, the market very obviously can't go any higher. Well, guess what? I started trading in, as I said, and as I have said, in the mid-1990s. I started trading futures, grains, softs, metals, stuff like that. And we would all look over at the guys trading equities thinking, you guys are flat out of your mind in 1995 to be buying this market. 1996. Here we go. Let's pull up the exact chart of the S&P 500 index in 1996. You guys are flat out of your mind. Look at that chart. Look at how high it is. You are out of your mind. It can't go any higher. All of 1997. Now you really got to be nuts. I mean, yeah, we were a little early before, but now you really got to be nuts. The market can't go any higher. And let's do one better. Let's switch over to tech. Yeah, tech in 1998. The market look at the chart. It cannot go any higher. It's gone parabolic. Yeah, guess what happens when it goes parabolic? Then it can go the Joker insane. By the way, that was back in 1995 we were saying those guys were out of their mind to be buying the market because it was so high. Yeah, now the Joker's gone on a bender. Now it's 2000, right? So that's why I put those posts there, is don't ever get yourself involved in a camp of like, it can't. And I realize this is also touching on the subject of bubbles, and we had that entry about, ways to start to think, maybe am I in a bubble? Could this go on for years? What am I going to do? We still have to get to that. I understand that. I realized as soon as I started creating the outline for it and the read the position service we're going to have, wow, there is a lot to unpack here. And things I got to think about where new traders are at and things they may not know, and they've been pulled down this rabbit hole of indicators. And I'm not talking fundamental analysis. What's better, fundamental or technical? And they make it like this camp A or camp B, and which camp are you in? And I'm for camp tech. I'm not talking about that. But newer traders are pulled into these rabbit holes so deeply. It's like when I started thinking about it, it's like, man, I really got to unpack this, because I do believe we could be starting a stock market bubble. I said this afternoon in the Twitter stream. It could be just a beginning. Not necessarily, but it could go on for years. Did you notice the difference between me and FURU statements? I'm not some FURU sitting here going, it's going to go on for years. But have you entertained that possibility? How would you measure it? And what are you going to do for what you want out of trading? Those are all questions that need a lot of unpacking. So we are going to get to that this month. All right. We are going to get to that. But I wanted to talk about the trade that I closed down for a small profit today. Yeah, that was Paramount Global. And I want to talk about another problem we see in new traders when they start down a good path, right? So we'll hear, and I was the same conversation I was just having with a dear friend. We were talking about when they start down the right path in trading and they get off of the charts and they start thinking about the risk model. And they will say, well, I'm going to risk 1 to make 3. Or I'm going to risk 1 to make 2. Or I'm going to risk 1 to make 1.75. Whatever it is. Their terms for it, I'll just say Rob and NJ's term for it. It's not necessarily professional, but I like the terminology. I think it should be more of a professional term. Is risk advantaged, right? Math advantaged process. You're risking 1. If you want to, Rob told me this one time, and it was like we were talking about math advantage. It's like, hey man, if you want to come down to my house and we'll flip a coin and it's on a 2-for-1. I'll play that game with you all day long, right? And it's a good thought process. And there's also the inverse risk profile, which also can work. You'll have a very high accuracy rate, small win, small win, small win, small win. But when you get hit, you're going to get hit, right? You're going to have to take a larger loss than what your wins are. That can also work if you worked the entire process and the risk model to positive expectancy. Also very viable. And it's encouraging when you hear traders talk that way. But there's a problem. Have you ever seen traders and they're talking like, I'm risk advantaged or I'm math advantaged or I'm risking 1 to make 2, and it's not working. And I know I have to grind it out, but it's still not working, right? And it should. Like the math says it should work. This is like wildly difficult. And maybe they know they have to grind and they know about what that's going to do to their hit rate, right? Or conversely, you'll hear ones talking an inverse risk profile. In other words, small win, small win, small win, take the punch to the face, good defense, good defense, good defense, right? And take the punch to the face. But they'll get involved in this string of trades, and it's like, and they'll say those words, which aren't true, but it's not working. What am I doing wrong here? And there is something they're doing wrong, or at least how they're thinking about it is wrong. So that's what we wanted to talk about maybe in this first sort of entry for read the report is I just exited that Paramount trade, right? So God, where was it? Back here? I think it was like right around here. I can't remember exactly. But anyways, I sold some put premium. Maybe it was right around here. Regardless, I sold put premium. And it could seem there's some contradictions there because I said this is cash covered. If I get assigned, I don't mind. Listen to the wording very, very carefully. If I get assigned, I don't mind if I get assigned. Right? And I just sell cash covered and, just collect the premium. It wasn't a lot of premium. So if I didn't take this to maturity or to expiration, then I'm taking even less of a profit. We did take a profit on it, but why exit early? Why exit early? Shouldn't we need every bit of profit you can possibly gain if you're going to work when this is an inverse risk profile, right? So shouldn't you get every bit of profit you can possibly gain? Why would you cut that short and take a small win rather than try to maximize and get as much of a win as you can? Okay, so that's what I want to talk about in this sort of aspect of, sort of this first entry, I guess, of read the report is the reason and the rationale and what a lot of those guys are missing when they try to do a math advantaged risk model and it's just not working for them. It's just not. And they're just having a really, really difficult time. Well, it could be that they need to grind more because the hit rate's going to be lower. But here's a key piece that they're missing.